Welcome to Trading Lounge and the European indices for the 11th of February, starting with the DAX on the 4-hour chart here. Everything's going pretty much according to plan. There's a couple of things I want to chat about though. We were looking from the low here up for wave 1 in line with the S&P and the Nasdaq, and then pulling back for wave 2. This market's a little bit more advanced in the correction than the US markets, and well, pretty much in line with the Asian markets. The Asian markets already had pulled down here where the S&P was still moving higher. So we've got this 3 legs here already. So we need to talk about that, but also want to talk about this little area in here. We've had that low here and the move up and then the move back down through here. This move here is in 3 waves. Now on the cash market, this is not the low. This is the low on the cash market. So I just wanted to talk about that for a moment. So can you see that in here? So yeah, that's it. So you can see here it's quite clear here that we've got this move up here and then this corrective pattern here. So the futures market and CFD market had pulled down lower than this previous move here. So there's a good case that we could use this as wave 1 here and 2 here and 3 here and 4 here, and then move straight up here for wave 5. So yeah, so just chuck a bit of a spanner in the works in that case. But still, it won't matter that too much, but we just need to be a bit cautional here. So if I go from the 4-hour chart to the 1-hour chart where we were kind of doing our work here a bit. So yeah, it's unfolded down quite nicely in terms of that A, B and C wave here. The ABC for wave 2 would be pulling back deeper into this box here. If we were looking at a wave 4, where we can clearly, well, it depends how you look at this with the futures market or the cash market then, doesn't it? Because if this is wave 1 here and 2 here, then this is wave 3 here and 4 here, and we don't need to come any further down. So I'm thinking, not that it matters, it can come down here further, so just be mindful of that. But the long trade is a nice setup now. So what we normally do, the standard is we look at this high here, then we bring it down to the second high here to get into, and then we could bring it down to this high here as well, but we're far better off looking at a classic trading levels pattern sitting in that particular space. So we can look at it like this. So if that's the level here, the arrival, the reaction, the first high above the level, then we can use that high, and then we may even in this little space here, we can get this bigger pattern in here sitting in this little space here. So we should be able to get an entry closer to that 14,000 level there. So that would be the trick. So just visually you need to see the first high above the level in here and then use that as your reference point. So that may be down here much further here with any luck. So you just got to be a little bit careful that this could count here as 1, 2, 3, 4, 5 for wave C and finished here. But the US markets seem to have further to go down. So it's possible that this can drop lower through here on this. In terms of shorting this, I might just go to the tick. Okay, so this has got a slightly different count. This is 100 ticks on this one. And not to worry about, it's just an alternative count that I was working with through here. And it could be correct, not that it matters today. We're just looking here for the short trade here, if that's going to be possible. So we can view this here as an impulse wave to the upside. It looks like we've got 5 waves. No, it's 1, 2, 3, 4, 5. No, it could be counted as an A, B, C, maybe 4 or 5. Yeah, stretching it a little bit. The 61.8% will be about here for that. It'll take us into the 6-9 area here for that. So I better just check that. It's good enough. So I think for the short trade, we need this number here as the resistance. So this would be, let's just imagine for a moment, this is 1 and 2 here. So we could go 1 and 2 here and 3 here. So that will bounce off there. and that would be 5 here, the first thing above the level, just down. So that's where the short trade can take place, under this level here for that. So you need to allow that to come down for the first low below the level, and then kick back. So it'll look a bit like this here. So that's the 900 that would come through here, bounce back. Doesn't have to come back up above the level, but all of these lows here are important to short on, okay, because that would prove that the market's going lower at that point. It may not come back above there and just have this particular pattern just here, but it still gives you the same thing, that low and the second low here that you need to short on, okay. So yeah, that would also be below the 61.8% at that point, so that's all good. I mean, they could certainly go up from here, don't get me wrong. What I'm actually looking for here is a breakdown of this move up here, because this move up here has really had its correction already here, so it should just go up from that point. And if it is, then you know that we're looking for that classic trading levels pattern sitting on top of 14,000 there. Okay, but if this was going to break down in line with the S&P 500, then we need it below the 13.9, and as a retested resistance, that would look good at that point. Okay, let's have a quick look at the FTSE. Not doing much as usual, so we viewed this as being impulsive to the upside and corrective in through here. We're keeping the stop out of the way. We've got a position or two in here, and with the US markets and the DAX, it's got a possibility of coming down and testing that 6,400. So we need to be mindful of that for that. In this case, if you're long over here, then I think we just need to protect that there. I think a small loss is a good loss, and then we'll look to get back in above the level, because what sort of haunts me here a little bit is that this could still be viewed down here as wave 1 and 2 here, and all the third wave here, which would be this one here, and then bringing this back here for the fourth wave into here, and then having a deeper fifth wave in here, because this has been very reluctant to move up in line with the other markets around the world. So there's something very weighty about this, and if the other markets are going to turn, and the US have got a holiday on Monday as well, so Friday's volume is going to be light, yeah, so the markets normally, either when they come back from holidays, they're normally quite bullish, but other markets in between that can either run on their own steam, or just become stagnant in that period of time. So yeah, just be a bit mindful about that. So I just want to protect that there. We can always move back in. Okay, I'll leave it at that. Thanks for tuning in. Cheers.